Look, welcome to Terry's Tips, guys. Get a notebook, get a pen, guys. This is a must-watch video for anybody who's looking to get approved for business funding. If you are an entrepreneur, aspiring entrepreneur, investor, small business owner, if you even just have a side hustle and you need some money to grow your brand, this is a must-watch video for you. And specifically, guys, I want to go through what lenders are looking for. I'm going to simplify the process for you. What do you need to look like on paper for lenders to approve you? I'm also going to give you guys some nuggets around the different types of lenders, the different types of business credit, and some actual options for you. Right now, I do my nugget at the end. All right, so number one, you have to be, your pre-step, you have to be a legal entity, right, to get approved for the bigger money. That means not a DBA, not just have a website, not just have, not even sole proprietor for some things. You need to actually be a legal entity. And the lenders are looking for three different areas. I want to simplify this. Number one is, drum roll, you should know this one, credit, right? They're looking at personal and or business credit. What do you need to get approved for business funding? If you have strong personal credit or strong business credit, and maybe you're a newer business, maybe you don't have a bunch of revenue yet, this is a way to get approved for business funding, because your credit worthiness now shows the business lender that they can trust you. You're financially literate, you're financially stable. So if you are a business owner, entrepreneur, whatever, and you have low revenue, but you have a 700 credit score, you can get approved for some business credit. Now, pause. Nugget right here. Some different types of business credit. And the reason why you need to know this is because there's so many different options. So when you guys are looking at high level strategy, sometimes you may not get approved for the business unsecured line of credit, but you can get approved for a business credit card or a business term loan or a business fleet credit card that would still help your brand. So you need to be educated about the different types of business credit available to you. I'm going to give you some of them, okay? Number one, business credit cards, business corporate cards, which are different than business credit cards, business fleet cards that are like for gas, WEX and Exxon and Gulf and 7-Eleven, business retail cards. Those are things like, business Best Buy, business Staples, business Amazon, business Home Depot, business loan, business Lowe's, okay? And then also there's business loans, which are also called term loans. They have micro loans, guys, that are any loan that's 50,000 and under. There's SBA financing, there's working capital, there's merchant cash advances, there's business auto loans, there's commercial real estate loans, there's hard money lenders and private lenders. There is even tier 1 vendor accounts, net 30 accounts, guys, even asset-based financing. So pause. I just gave you over about 10 different types of business credit. You need to know this because as you're doing an audit of your business, this is an action item, do an audit of you and your business. Where are you weak and where are you strong? And then think about what type of business credit would actually help you right now. And then start to dig into the lenders in that area and the approval criteria, right? If you have a low credit score and you're trying to get a business credit card from Bank of America, that's not going to fly. If you have a low credit score and you're trying to get $100,000 unsecured line of credit from, Truist or from Citizens or from, Bank of America or Wells Fargo, that's not going to fly. So you need to understand what the lenders are looking for. So number one was credit, personal and or business credit. And all of you should have a goal of a 700 and above personal credit scores on all three credit bureaus. Yes, even for business credit, because looking at the business owner, especially if you are a newer business or if you don't have a lot of revenue, is part of the approval criteria for some business funding. And nugget right here. This is a wealth building ministry, right? This is about leveraging your personal and business credit to build wealth. So as you get to be a multi-millionaire, as you're building wealth and legacy, and we're focusing on net worth, your credit, personal and business, is your financial integrity, is your financial report card. So you are looking to have a 700 above personal credit score for business credit, for personal credit, for real estate financing, right? So it's going to help you in all of those areas. So how to get approved for business credit? Item number one was credit. Now, another nugget right here. our 680 program. If you are a business owner and you have a 680, 700 above on all three credit bureaus, personal credit bureaus, TransUnion, Equifax, and Experian, sometimes we can fast track you getting business funding. We even have a $150,000 hybrid line of credit where our team will look at getting you a business line of credit. But if you don't qualify for that, they can also look at getting you business credit cards, or sometimes you'll get a combination of approvals for business and personal credit. So if you are a business owner, entrepreneur, small business owner, so you have your side hustle incorporated and you have a 700 credit score right now, I'm inviting you to apply for our 680 program. And at the initial conversation, guys, it's a soft inquiry just to actually apply and have our team evaluate you and speak to you. And then if you get an offer and you go for it, that's when the lender may actually do a hard pull and they'll let you know in advance. So I'll put the 680 program link in the description of this video and in the pinned comments. Okay, so step number 1 was credit. Number 2, cash flow. Come on, somebody. So this is where, let's say you have low credit scores. You have a 600 credit score, but your business is cash flowing already $10,000 a month, and you're trying to get to $15,000 a month or $20,000 a month. You want to open up a new location. You want to expand. You want to offer new products. You want to hire staff. So you still need more money to grow. If you are a business that has cash flow already, I would say a benchmark is $5,000 a month or $10,000 a month, but that's not for everybody, but at least have it's more than zero, okay? Then you can qualify for financing if you have cash flow. Now, pause, nugget right here. Types of lenders, I'm gonna put them into 3 categories, okay? The big bucket, number 1 is big banks, right? So your big traditional banks, that's your Bank of America, that's your Wells Fargo, that's your Chase. Those are your big banks. And a lot of times, even for business credit, they're still going to look at your personal, right? The second type of lender, these are types of lenders. I'm giving to you in 3 buckets. The second one is regional banks and credit unions, right? So regional banks have a ton, somebody say a ton of money for you, for entrepreneurs and investors and small business owners. A lot of times people just don't apply because they don't know that this is an option. So some examples of some regional banks are like Truist, PNC, Santander, Citizens, BB&T, all of those kind of regional banks are not the great big banks. Then obviously you know what credit unions are, right? So the second tier is regional banks and credit unions. I'm putting them together, okay? And they have sometimes lesser credit requirements. Sometimes they will work with you. They may not just have as many business credit options, but a lot of them do have, like, for example, Citizens has a business mortgage. Citizens has a business credit card. Citizens has, a business line of credit, business flex. They have business flex loans. So does PNC Bank. So does Truist. So is US Bank. So does Regions Bank is an excellent one also. So your mid-level banks and your credit unions. And type of lender number 3 is one of my favorites that I talk about all the time is fintech companies. So these are private lenders for business credit specifically. So guys, think about your fintech companies, the business credit, how hard money lenders are to real estate. They are outside of the traditional lenders, but they have a ton of money and they specialize in funding in this area. One I talk about all the time is Rock Financial. The reason why I talk about them is because they are a well-known lender, they are a reputable lender, and they have given even a lot of our wealth warriors millions of dollars in funding at this point. If you are interested, if you are somebody who is a business owner and you at least have some cash flow, then regardless of your personal credit, I'll put the link for Rock Financial in the pinned comments and also in the description. You can do an online application, have somebody call, I'll reach out to you and speak to you. And same thing, before you actually go for funding, you can have a conversation first and see if it's for you. If it's not for you, if it'll be a hard inquiry, but you'll have a professional from a fintech company reach out to you and let you know what you qualify for. And honestly, guys, if you don't qualify for something, get the feedback, understand why. That way you can go back, fix that item, and then come back to this, okay? So the 3 types of lenders, your big banks is the first tier, your second tier is your regional lenders and your credit unions, and your third tier is your fintech company, and they specialize in funding businesses and entrepreneurs so you can get more money faster. It may honestly be a higher interest rate because you're higher risk. A fintech company is saying yes to you when a bank is saying no. So for you as a business owner, your only goal is to have a good use for that money. Put it into something that's going going to be income producing, something that's going to generate revenue, something that's going to help you expand. That way you have the means to pay the money back and have a profit. And then guess what? First they approve you for $10,000, then they approve you for $20,000, then they approve you for $50,000. Pay the money back responsibly. That way you can go back and a lot of times get more money at a better rate. So you're building that relationship. Okay, so 3 types of lenders. And for how to get approved for business credit. So way number 1 was credit, right? So the 3 C's: credit, cash flow, and the third one I'm going to talk about right now is collateral. I just talked about collateral in the video I did, how to put your car in your business name, your LLC's name. If you did not see that video, I will link that video as something for you to watch next, because there's strategy to having collateral in your business's name, and sometimes that can help you get approved for funding. So say maybe your credit is mediocre, say maybe your cash flow is mediocre, but your business owns equipment, your business owns vehicles, your business owns real estate. That's considered collateral. So because business credit is so much more fluid, there's more things that they'll look at. They look at more ways to evaluate you. So say you apply for a business term loan and you get denied, but you know that your business owns 3 vehicles, your business owns a duplex, or your business has, equipment that's worth $10,000. Say to the lender, okay, why was I denied? Well, did you know that I have some collateral? Does this change things? Can I get approved for something else? Maybe they'll say to you, well, no, you don't qualify for an unsecured line of credit, but you do qualify now that we have this information about your business owning collateral. Now we can approve you for a $50,000 term loan based on the collateral that you own. Come on, somebody, there's levels to this. Pause. If you've gotten value from this video, if you get value from my channel, if you've ever learned anything from me, I would love for you to subscribe and comment and like. But subscribe because that shows me that you value these videos, that you're learning something. That shows me also what types of content you guys like, so I can make more of what you need. So the 3 C's: how to get approved for business credit, credit, cash flow, and collateral. So nugget, do an audit of your business. Number 1, pull your personal credit scores, your FICO scores. I recommend Credit Check Total or My FICO. So I'll pin that in the comments and in the description. Number 2, and also pull your business credit scores. Number 3, cash flow, right? So look at your business bank statements. Look at, your Stripe, your PayPal, your Square. Does your business cash flow anywhere between $1,000, $2,000, $3,000, and $5,000 and $10,000 are good benchmarks, but are you cash flowing? And number 3, collateral. Does your business own any collateral? And if it does, list those items out and have that ready when you apply for things, so you can let lenders know, hey, I also have collateral. Can this be considered in my application for credit worthiness? Come on, somebody, okay? And then I also said I'm going to put the application for our 680 program, which looks at credit, and for Rock Financial, that looks at cash flow a little bit more, in the description and the pinned comments. And for my nugget, you need a coach. You need training. Some of y'all need both, okay? And that's okay. People who are wildly successful value information. Information changes situations, and you have to think all of your knowledge, skills, and experience have gotten you to where you are right now. And I'm proud of you, King. I'm proud of you, Queen. You have success. You're thinking outside the box. You're doing something different. You are working on breaking that generational curse. But a lot of you have gotten stagnant, or you've hit a ceiling. This is where a coach helps you fast track that process. They give you laser tips. They have gone through what you've gone through, so they can tell you what to do and what not to do. Sometimes one piece of information is worth 6 figures to you. So guys, don't be scared to invest in you, because some of you are watching videos and videos and videos, and you're doing, you're reading things, but you just have not been able to break through to the next level. This is where investing in a coach is going to be a game changer. And you can't just get the information. Make sure that once you invest in a coach and you get the information, that you execute at a high level. I would love, and maybe I may not be the coach for everybody, but I am a self-employed entrepreneur, an investor. I have over 20 streams of income. I have retired myself from corporate America at the age of 38 and helped people, thousands of people across the nation. So if you would like for me to be your coach, I will put in the pinned description and in the comments the link to actually invest in a one-on-one coaching session with me. I would be happy to help you and be part of your story. Our coaching sessions are recorded via Zoom, and you get a copy of that. That way you can go through and watch through, what it is you need to do and execute and go build your wealth and your legacy for your family. Amen.